So we wanted to step back here a little bit. We think we've seen some structural winners from the COVID crisis. That sounds crude, but it is true. We've had a permanent pull forward of demand for some of the leading internet platforms, and they've also benefited from these really nice scale benefits. A lot of that's been priced into the stocks. We've had a dramatic up year last year, 2020, for the internet stocks, and year to date they've consolidated. We think that continues for a while longer. But when we start looking into 2022, which we're going to start doing this summer, the scarcity value of the group we think comes back. And when we do that, we want people to focus on some of the structural winners at reasonable valuations. That's your Facebook, your Amazon, some of the cyclical recovery names like Uber. And then there's a few outlier contrarian ideas we have, like Spotify and Stitch Fix, that we think investors should be hunting for as dislocated, high-quality stocks. So that's what we've done. We've come back to the sector, sort of post-COVID a little bit and tried to see what's changed.
So for viewers who are watching and they get the first part, they understand when a name has a correction and why that might mean opportunity, but it's happened to a bunch of names. How are you distilling from that universe which ones are actually worth getting into with fresh legs?
Yeah. So we want to make sure that there's a reasonable dislocation in the stocks, something like a 20 to 30% sell-off. And frankly, most of these stocks, we're close to peak multiples in this group. So of the highest quality names, the FANG names, there isn't really any dislocation. Maybe there will be later this year, but as the comps get tougher for some of the names like the Netflixes and the Amazons, but there's no real dislocation there. You have to go down. You have to be much more selective in this environment. And there's very few names that are truly dislocated and that are high quality. I think there's really only two. And the one at the top of our list here is Spotify, which had a really nice run up last year, traded off a fair amount this year, and I think it's set up for an inflection point in fundamentals. That's how we do it. We look for those DHQ opportunities. We had Facebook in 18, Netflix in 19, Uber in 20. I think that stock this year is Spotify.
Shepard Smith here. Thanks for watching CNBC on YouTube.